Welcome to Markets Now. I'm Michelle Rook with Kooima Kooima Varilek. The grains are mixed this morning. Soybeans to the plus side, wheat's lower. Corn kind of stuck in the middle, so it's traded both sides of steady. Over in the cattle complex, we opened higher, but are starting to lose some of that early momentum, and hogs are a little bit higher here as well. So, Brad, let's talk about the initial push here in cattle this morning, coming off of the cattle on feed report, especially that placements number at 104% or just shy of that. Talk us through this and, the market. Can we start rebounding now that we've gotten this out of the way?
Yeah, be glad to try to make some sense of it. Michelle, thanks for having me on. One of those days where we should have done this report 10 minutes ago, right? When we were nicely higher. Cattle markets backed up here to kind of mix. But to give you some, I guess, general perspective on one of the big fundamentals that we get every month, the cattle on feed report. I thought that last month's cattle on feed report kind of changed the tone of the market. All of a sudden, some of us were scratching our head going like, well, geez, we got 1% more on feed. We've had 3% less forever. And all of a sudden this big placement number kind of caught some of us off guard, me included. And it just took a little wind out of the fundamental bull sales. And so I think the market had been worried about this report since the last one came out, because the feeling there was that, well, October traditionally is always your biggest placement month. And the feeling was some of the preliminary numbers were that we were going to see a bigger than last year placement number. So, fast forward then to getting the report out here on Friday, the guess was 106 and it came in at 104, still 4% more than a year ago. But if I I'd like to give that number some real perspective. So I apologize. It's the number Friday was either the second or the third smallest. The only smaller one was the year prior. So it's pretty tough when you're comparing to a tiny, tiny number to not be more than a year ago. Give you a little more perspective. That 104 that the USDA told us it was Friday is 6% below the 5-year average. It was still a real small placement number. It was just bigger than a year ago. So, hopefully that, everybody can take a deep breath and not get too, wound up here about it. I thought there was a couple of interesting things about it. One that really puzzles me is Iowa's placements were down 17%. Iowa's marketing number was also very poor. If your listeners don't know, of course, or whatever your audience doesn't know, that I'm in Northwest Iowa. And as I thought about that over the weekend, I wondered if, first of all, we're current, no argument, period. We are current. Nobody's going to convince me otherwise. So we're not backed up here. So I wondered if maybe that's why that we're so pulled forward, that's why the marketings were bad. Typically, we would be selling our tail end of our calf crop. And I think we're still pulled ahead 30 days. So that's my explanation for the poor marketings. But I did think that the placement thing, a little bit, just a quick note. So Iowa, typical farmer feeder, some of the corporate states had big ups in the placements, like Colorado, for instance. So maybe there was a little more engagement from the more vertically integrated type operations that saw a bigger placement number there for the report.
Now, we don't get heifers versus steer breakdown, but we do get the weight breakdown. Was there anything there that was especially notable that we should talk about?
I wish there was. Unfortunately, we saw about a 3-4% increase straight across the board from light to heavy. I would have rather sat here and said, well, it's all because it's dry in Mexico, which it is. And so I know that there's been an uptick in the placements of those kind of cattle into Texas, particularly. And those would be light cattle that, will take a year to finish. But we were up a little bit on all the categories. My guess, like you pointed out, quarterly data shows you the steer and heifer breakdowns. So we won't know for a couple more months. Last month had a steer and heifer breakdown. That's why we knew that the October placements were a record. As of October 1, you had a record number of heifers on feed. I'm already kind of looking forward to the January numbers, where you'll get that breakdown of heifers and steers, and then in another week you'll also get the inventory report. I gotta think that we'll be looking at a situation where we've got a record of the smallest number of cattle available outside of feed yards by January. There's no other way that you can pull these cattle forward and place them without running out, out of the bank. So we'll see. That's a couple months away, though.
All right. So now that we have this Tyson cyber attack out of the way, we have this cattle on feed report in the rear view mirror. We've had our 3 days, our 3 big legs down. Can this market start to recover, do you think?
Yes, that's my expectation. I wonder if we're just a little ahead of ourselves. Seasonally, we would be. Typically it would be toward the end of that first full week of December when that would be more of the seasonal time. But we all know that seasonals are not the most reliable trading tool in the bag for sure. So I thought actually I think the cyber attack was under publicized. I thought that was a big part of the reason that we tipped over last week that day, and I think that bailed out the Packer. I think he was getting ready to have to pay basically 180 around here, and then when the futures collapsed, 178 was the trade instead. By the way, futures are still a discount to the 178. I think I'm probably in the minority here, but I think cash can be a little bit firmer this week. I think this number of show list up here in the north, particularly, very, very manageable. So if that's the case, we stabilize futures this week, maybe slop around futures a week or two, but then I think we come into after Thanksgiving here with a little better tone. I still think the first quarter of the year is going to be significantly better than what the futures prices are indicating right here.
The contrarians, though, will tell you that the Commitment of Traders report shows the funds are still long. And after a $23 break, you would have thought they would be flat or short by now, wouldn't you?
They have got staying power now. I mean, no kidding. I'm surprised too. Every week I look at it and think, well, surely this is the week where they gush. By the way, that data is several days old by the time we get it. So much like a lot of data that us cattle people get, right? Like, how about average weights? That'd be a nice deal, wouldn't it? Anyway, I've been surprised at that. Surely the caution is here to, do we have to blow those guys out before it gets better? I don't know. I'm going to go with the idea that I like it when the funds are long. I'd rather be with them than against them. Let's hope that they've got enough staying power. The market stabilizes and comes up out of here.
Okay. And Hogs seeing some firmness today, but has most of that run been technical? Because from a fundamental standpoint, we still have a lot of numbers out there.
I have a hard time coming up with much of anything that's fundamentally bullish hogs, unfortunately. The time of year, the average weights compared to a year were much above a year ago. The whole Chinese thing last week, the exports were very poor. The week before, they were very good. But the word there is that, their market is much, much lower than it was a year ago, which would imply a bigger supply. I think cattle hog spreads. I know you mentioned it, and I think you're spot on. I think that, believe it or not, this cattle hog spread, these algos that trade that deal, have a lot more influence than what we'd like to admit. So when the cattle collapse, the hogs rallied right up to, get a 100-day moving average if you don't have any other charts, and if you can get above that, you can sell me on the idea that maybe this thing's turned for real. Otherwise, I think this is an opportunity to, if you're a hedger, to take a hard look at it. Going into more numbers, seasonal bad time of year. I don't buy it.
And soybeans pretty volatile in the overnight session, but we're back to the plus side here, and obviously South American weather is the focus.
Trading the grains anytime is difficult. This time of year is frustrating to me. I mean, I said this to you before, and I live in Iowa, and I sometimes can't tell if it rained in Iowa or not, right? And to be able to gauge, the now you see me, now you don't weather forecast that you have down there. You got to remember, it's really early. You're not going to lose a crop this early down there, but maybe delay it, maybe get us a little bit of hope for the corn market. I guess some stuff going on with Argentina, more political type stuff, innuendo through the overnight caused some of the volatility. I don't know. Right now, I think the forecast is a hair drier, and that's why the beans want to try to rally a little bit. Very difficult to trade. I would summarize my feelings on the grains that this is not the time of year where typically it works to be bearish. I think we've got a crop put away. Yeah, it was a little better than we thought it was. I think you'll create demand over there in the corn because of the price. That's the function of the market, to go lower to get to create some demand. Whether we get very far from here, that remains to be seen. I just don't see that the market has to get a lot lower.
All right. So if soybeans are going higher, does corn get a post-harvest rally just based on that?
It could, but, if we could get 20, 25 cents, I mean, that's probably.
Then you're going to get farmers selling, aren't you?
Right. And the crop was bigger than they thought. It's just what it is. I don't know, maybe a little modest rally. Although if the South America thing would really go right where they can't get that second crop planted on time, yada yada. But I think we're premature to bank on that. I just hope we stop going down first.
Yeah, I've wondered that myself about the second crop safrina when we're going to start trading that news out of Brazil, but I'm with you on that. All right, thanks for joining us, Brad Kooima with Kooima Kooima Varilek. That is Markets Now.